Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 13th of January. So the markets remain in a bit of a risk-off tone, and it's all to do with the rising bond yields. In the US, we've seen yields approach the 5% on the 10-year. If you look at the 30-year bonds, you can see that the yield has crossed the 5% level on Friday before pulling back a little bit, but it remains very close to reaching last year's highs. And there is a similar story in the UK where bond yields are rising every single day almost, causing bit of a volatility in UK assets. So it's all to do with expectations that inflation is going to remain in place for longer, and that monetary policy in the US and elsewhere is going to remain tighter than would have otherwise been the case. So as a result of that, the dollar index is on track to rise for the fourth consecutive month. And if you look at the weekly chart, the dollar index is up for the seventh consecutive time. This is putting a lot of pressure on currencies where the economy is not doing very well, or the central bank is a little bit more on the dovish side. For example, the euro dollar has now dropped to the 102 level, a level we had previously highlighted as potential support. Below that, we have 101 and then parity as the next downside targets. In terms of resistance, 103 is now the key level to watch. Above that, we have the November low at 103.33. So the area around that zone could be the next resistance area to watch on the euro dollar. Now, with both the dollar and bond yields on the rise, gold has actually held its own rather well because of concerns that inflation is going to erode the value of fiat currencies, and so people are potentially buying gold as an inflation hedge. But with rising yields, the opportunity cost of holding gold continues to rise, and for that reason we are looking at weaker gold prices today, although this does not suggest that the precious metal has stopped by any means, but it is coming off a key resistance zone around 26.95. This level marks the resistance trend of this consolidation pattern, where we also have the 61.8% Fibonacci retracement against the October all-time high coming in around that area. So we've seen a bit of a pullback in gold prices. Too early to say that this is a potential trend reversal, but if gold were to break below this trend line that has been in place since the middle of last year, then that could put the bulls in a spot of bother. So watch out for a potential break below that trend line. Rising bond yields are also pressuring the equity markets, and the S&P 500 has finally started to show some bearish price action in the last few weeks. It has broken out of this bullish channel and moved below the 21-day exponential moving average, creating a few lower highs and lower lows in the process. Right now, it is testing potential support at 5,772, marking the high of this candle right here as I zoom in. Below that, we don't have much in terms of obvious levels of resistance or support, I should say, until the index potentially gets to this blue shaded area where previously it had found resistance back in July of last year before that area turned into support. And so another retest of that area cannot be ruled out at this stage. There's also the bullish trend line that has been in place since October of 2023. So we could see the S&P potentially stage a recovery attempt at around there should it get to those levels. But if it doesn't and it bounces back from here, then we can see where the index may come into trouble once again. And for me, some of the levels to watch include this level right here at 5,827, marking the most recent low before that level gave way on Friday of last week. So that level is now the key short-term resistance level to watch. And then above that, we have this shaded area here, around 5,882, where previously the index had found support and resistance. So those are the next key areas of resistance to watch. Now, for as long as the index remains below those levels, the short-term path of least resistance remains to the downside. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.